All righty. Hello, hello. Welcome everybody to our very first webinar of 2023 here at LBAN. Such a blessing, such a pleasure to see all those beautiful faces here joining us today for this very informative, very engaging webinar that we have set up for you all today. So thank you all for taking time out of your busy schedules to join us here today. Before we get started here, folks, I want to just quickly go over some quick housekeeping items as we always do with these webinars. If folks could please keep your microphones muted unless you are planning to ask a question or you are planning to speak. And if you have the ability to, we would encourage you to please turn on those cameras. We love to kind of have that, close to human in-person experience that we can with these webinars. And so when we have everybody's cameras on and everybody's faces there joining us, it just feels like we're here meeting in person. So if you have the capacity to, please feel free to turn on those cameras. Great. I want to start off here to go over a couple announcements with you all and kind of share some of the latest programming that we have here for LBAN. We have some very important events taking place, particularly in February. And I wanted to just share and just remind everybody that February 16th is one of our premier events that we do here at LBAN. It is the State of Latino Entrepreneurship Summit event. It is the event where we present the annual research report that we do in collaboration with Stanford Graduate School of Business. You don't want to miss it. It's going to be a very informative and very impactful event. We're going to have a wide variety of key stakeholders there, from entrepreneurs, capital providers, policymakers, senior executives of major corporations as well, and just really game changers, right? That really do the work in terms of helping our community and the Latino entrepreneur community succeed and thrive. And so you definitely want to be in the room when those findings are presented and when we're having those deep discussions there. So in the chat, I will be placing the registration link for that event in case you have not registered for that. Marianne, who is our fantastic marketing lead here at LBAN, has placed that link there. So folks, if you're interested and are available to attend that, please join us on February 16th at Stanford. And then for the alumni that are here joining us in the call, there are also, before I get into that, on that same day as well. So we're going to have the Soul event take place during the day. In the evening, we're going to be hosting a gala dinner. This will be taking place at the Crown Plaza Hotel in Palo Alto. It's about 10 minutes away from Stanford. And this isn't just any other dinner, folks. This is the 10-year anniversary of LBAN. We're going to be celebrating 10 years of just, research, education, and just community building that this organization has been able to put on for over 1,000 individuals, well above 1,000 individuals, companies, and other communities that our organization has impacted. So please join us for that gala dinner if you are available for that, celebrating the 10-year anniversary of LBAN. And then also we are going to be recognizing one of the greats, the legends, as I like to say, with regards to Latino entrepreneurship, Dr. Jerry Porras, and recognizing him for all his efforts and contributions, not only to LBAN, but to Latino entrepreneurship in the United States. So registration for that gala dinner is on that same link for the registration of the Soul event. So make sure that you are looking through that registration link, identifying the ticket types per event, and registering accordingly. That gala dinner event is a paid ticket that's separate from the Soul registration ticket. Now, for the alumni that are here present with us in this call, we do have some events happening for you all that you all can take advantage of. First, I want to share that on February 15th, this is the day before the Soul event. We are going to be having two alumni, Laura Engine and Gustavo Zientek, who are here on the call. If you two can both put your emails and your contact information in the chat, we'd greatly appreciate it. They're going to be hosting a golf event. So that'll be taking place on February 15th at 10 a.m. Pacific Standard Time. The venue is about 30 minutes away from Stanford. If you all are interested, please follow up with Gustavo and Lauren. They can provide more information. There is limited capacity for the event. So if you all are interested, please feel free to reach out to Laura and Gustavo. We'd love to see you there if you all are available for that. And then on February 17th, that is the day after the Soul event, for alumni only, we're going to be having our Alumni Summit event. You definitely want to join us for that event as well. That's going to be a really nostalgic event for a lot of our alumni. We're going to be having an immersive experience where we'll be having some panels set up for you. We're going to be having Dr. Huggy Rao and Dr. Bob Sutton speak to you all as well. And then also there's going to be some internal activities taking place as well. That'll be taking place in the morning, February 17th. And then Marianne, or I'll go ahead and put that link there in case folks are interested. So please join us for that event as well. Alumni, we'd love to see you there. We'd love to community bond and really have that experience at Stanford with you all. That event will be taking place at the Stanford Faculty Club, again, Friday, February 17th. So I'm going to go ahead and put that link here in the chat for alumni that are interested and available for that Friday event. All right, perfect. And with that, I will go ahead and pass it over to Elian.
All right, thank you so much, Diego. And Diego in a minute is going to be putting us in a spotlight view so that you can see myself and the rest of the speakers. But before we get into that, I want to mention a little bit about what we're going to be discussing here today. This is a webinar to talk about angel investing, specifically with the Angeles Investment Group. So we'll talk a little bit more about that, but I want to give an overview before we do that about what are the different types of investments. And before I do that, just a quick introduction into who I am. So my name is Elian Saduriker. I'm the Director of Engagement and Capital Providers here at LBAN. And so my work within the LBAN organization is to help our founders, our alumni, and our participants of our scaling program connect with different capital providers, whether it's a bank for a line of credit or a loan, or a VC or angel for an equity investment. And so my work is to help connect, along with Adrian, who's also on this call, to help connect our founders with the different sources of capital that might help them scale their business. So with that being said, and we do a lot of great programming around that, I just want to mention a little bit about what is angel investing and really what's equity investing over what's considered debt. And for some of you, this might be repeat messaging, but I just want to cover that. And before I do that, if on the chat, you can let us know if you're a startup, if you're interested in becoming an angel investor, or if you're already an angel investor, so that we kind of know what our crowd is sort of made up of. And as we go through some of the content, we can maybe tailor it a little bit better for the audience. When it comes to a company and when it comes to the different types of capital that a company could take on, there are really two different big sources. One is debt, which is your traditional loan or line of credit. This is where an institution like a bank or a community foundation or just an institution that maybe is much more risk adverse, where they tend to ask for collateral in order to give those lines of credit or to give a loan. That is one way that companies can obtain capital. That way, with debt, tends to be more difficult for companies, as there needs to be a lot of collateral, there needs to be a lot of paperwork in order to do that. It's a great option, but it's just one option there. Then there is what is considered equity. Now, equity in its simplest form means that you are investing in a company for shares or stocks of that company. And there's a lot more complications to it, which we'll go into that a little bit. But this is where individuals, accredited individuals, can invest in companies at earlier stages where there's maybe more risk, or just maybe a company is just starting out, and they can get investments that give them bigger shares or bigger equity in that company. So we'll talk a little bit more about that. I know it's a very simple overview of what investing is, but just to kind of cover it one last second, there's debt and there's equity investments. Debt is your traditional bank loans, lines of credit. Equity is where you have venture capital or angel investors that give money for shares or stocks of a company. So you're giving up part of your company in order to receive investment and capital to help grow the company. So I advise all of you, whatever stage you're at, and I know that I've been seeing in the chat people that are saying, hey, I'm a founder and I would love to see some different options here. I'm a startup. I want to become an angel investor. So seeing a lot of different people within the audience, I advise all of you to ask questions. Diego, along with the rest of our team, Mariana, Lucia, and Jennifer, will be monitoring our chat to see what questions are there. Adrian as well, to see what questions are there. Towards the ending part of this webinar, we'll open it up to our guest so that we can answer any and all questions. So please make sure that as you hear things, you're asking questions so that we can then call you up and be able to answer those questions. Now, I want to introduce who our panelists are for our conversation. And we have a great panel made up of experts on both sides of the equation. So we have angel investors, people that know a lot about angel investing, but also a startup founder that has gotten capital through angel investing, so that we can look at both sides of the coin when it comes to angel investing. So the first person I want to mention is a great friend of mine, an expert on angel investing. He is a board member at the Angel Association, Eli Velazquez, who's absolutely amazing and calling us from France late at night, so making the effort to be here with all of us. We won't dock any points for the fact that he's in France, but thank you so much for being here so late at night. I also want to bring up David Olivencia, who is a co-founder for Angeles and has some pretty big news. David, can I share the news?
Sure.
Okay, that you're now the CEO, correct, of Angeles? So David now being the CEO of Angeles, another great friend, somebody who does a lot of tremendous work in making Latinos angel investors, which we'll talk about that more and why it's important for Latinos to become angel investors. The last person that I'll bring up is Francisco Cornejo, who's an LBAN alumni, CEO, founder of Familyfy, got a great Storybook app, which highly recommend all of you to go to the App Store and download. I think it's on everything, right? All mobile, Android, and iOS. So highly recommend that you all do that. So with that, would like to just start talking a little bit more about angel investing. What I'd like to do first, before we get into any of the questions, I'm doing a lot of the talking. So I'd like to go one by one, Eli, David, and then Francisco, and just give an overview about your background and your connection to angel investing. We can do Eli, then David, then Francisco.
Awesome. Thanks, Elian, and thanks to the LBAN team for having me. And it's good to meet folks here online. So again, my name is Eli Velazquez. I wear a few different hats. I serve on the board of the Angel Capital Association. I'm a proud member of Angeles Investors, and I'm a founder of my own national network of investors called Investors of Color for Black and Latinx investors. But my journey into angel investing started as far back as 2005, managing the Angel Group from my hometown of El Paso. Started another Angel Group out of the Texas Tech University system. Went on to run a program for the State Department to build angel networks in other countries, and then subsequently been doing that work for different groups with large nonprofits, universities, and government entities and agencies. So I wanted to put a plug for the Angel Capital Association. That's going to be a great resource for folks that want to learn more about angel investing. It is a professional society for angel investors, has about 275 angel networks, family offices, and platforms, and has about 14,000 individual investors. So it is the place to start to learn, to connect, and start building your kind of investor muscle. So it's great to be here, and I look forward to the conversation.
Okay, David?
Yeah, no, excellent. Thank you, Elian. Thank you all for joining. David Olivencia, about 28 years in the technology industry, technology executive at a lot of Fortune 100 companies. The last 11 years or so, been doing angel investing. I've invested in about 70 or so early stage companies. I've had the fortunate of having 2 unicorns in my portfolio, 10 that are over 100 million in valuation. And I've also seen about 10 to 12 die as well. So I've seen it all. I'm a co-founder of Angeles Investors. We'll talk a little bit more about that. But I also serve on the board of the Irish Angels, which is the top maybe 10 angel group in the world, and have done most of my angel investments through them. And they're Notre Dame affiliated. So I went to Notre Dame, a bunch of alumni. That's really one of my major entries into angel investing. Yeah, so that's me. Look forward to the conversation, and thanks all for joining.
Absolutely. Francisco?
Hey everyone, I'm the co-founder of Storybook. Thanks, Elian, for that fantastic introduction. I know you love the app, and so does your child. I think it's a must-have for anyone who has a 12-year-old or younger. We have content from babies to 12-year-olds to help them relax, feel better, improve their self-esteem, sleep better, which is something that we parents value a lot. Since we started Storybook in 2020, we have raised more than $2.5 million. And a big part of that comes from angel investors. The most recognizable figure within that group would be Jason Calacanis. He was our first check, one of the most noticeable angel investors in the US. But we also raised from his syndicate, the Launch Syndicate, and Angeles Investors. So happy to be here with David. We've been interacting a lot since they invested in our company. We've been growing a lot since then, and happy to provide the perspective of the benefits, because I cannot see other thing that benefits from having great angel investors backing you up.
Absolutely. And David, hopefully Francisco becomes the third unicorn in that, and we'll talk about that.
Hopefully, Francisco said 12 and younger, but my wife calls me a baby too. So maybe, she can maybe get it for me. Who knows?
That's right. That's right. So it's a great app and highly recommended. I know from the three of you, we'll definitely get so much information. We'll start with some of the basics and then maybe dive into some of the more complicated parts of angel investing. But I think angel investing in general is a simple way of investing and getting involved, and especially in creating wealth for our own families, but also in the Latino community, and we'll talk a little bit more about that. I want to start with Eli. If you can just cover what is an angel investor, why are they important to startups, and how are angel investors different from venture capital? I think a lot of people are probably familiar with Shark Tank. They see maybe those individuals. So maybe you can share with us, what is an angel investor, why are they important, and how is this different from venture capital?
Sure. So if you think about why are they called angel investors, the history goes that back in the Depression days, when the Broadway shows were going out of business, there would be a secret investor that would come in and save the show, and they were considered angels, right? An angel that came to save the Broadway show, and that's how the term angel investor came to be. But at the end of the day, angel investors are individuals with, just like anybody on this call, who chooses to make investments in startup companies, and they're very risky investments. Because the company's still growing and it's still trying to validate itself in the market. And it's also risky for the investor because they're using their personal money, okay? So these are individuals who have amassed some level of wealth or have amassed some level of capital, and they are now putting their own money to work. And so that carries a lot of risk on both sides of the table. In order to be an angel investor, you do have to be accredited according to the Securities and Exchange Commission, the SEC. So you have to meet any one of the following criteria. You're either making $200,000 a year as an individual, or $300,000 with your partner, or $1 million in assets, not including your home, or you're meeting some form of professional criteria. You hold some sort of FINRA license, you're a part of a GP of a fund, or you're part of a family office. So these thresholds are for individuals that are meeting some level of wealth, right, or liquidity, and they're putting their money to work into startup companies, and they can be doing that through angel groups or individuals or platforms like AngelList and others. And at the same time, they're hopefully working to build a portfolio, right, that ultimately generates return. And there's all sorts of data around all of that we can dive into, but at a high level, that's what angel investors are. VCs are formal organizations that go out and raise capital from institutions, retirement funds, pension funds, corporations, and even angel investors can be investors in a venture fund. I'm an investor in a couple of venture funds. And then the operators of the venture fund make the decisions on where to make those investments. So the difference here is an individual versus a professional organization. And angels are important because many of them are just like you. They're entrepreneurs. They've done it. They've seen it. They've broken it. They've rebuilt it. And so they take that risk very, very early on. And they also serve as mentors and partners to the founders. So they're very, very critical to the ecosystem because they do absorb some of the highest risk in the startup's growth. So the more that we have Latino investors, I mean, what a friend of mine said, the money flows to people it knows, right? And so the more connections that we have and the more we're making these connectivity, the more capital that we can get deployed into our Latino ecosystem. So that's the basics of angel versus VC.
Excellent. And I want to highlight one key thing that you mentioned there at the end, which I think is very pertinent to the crowd that we're speaking to today, which is, an angel will invest capital, but also be able to support with expertise, right? And as we look at a lot of those that are listening here today, a lot of you are founders yourselves, maybe in a traditional business that's not high tech or that doesn't take equity, but you're interested in equity investments. You have a wealth of knowledge that you'll be able to transfer in one way or another. And we see that at LBAN, how different businesses connect with each other. So I think that's another key part of angel investing is not just the money, but also the network connections and expertise that you're able to share. David, I want to talk a little bit about the Angeles Investor Group. Why'd you start it? What is the Angeles Group? And the last thing about that, what is the goal of the organization, or really why does it come together? So if you can just give us some brief history and talk about the Angeles Investor Group.
Yeah, so throughout my career, in addition to the tech industry, right, I've been involved with a lot of different Hispanic and Latinx nonprofits around the country, Congressional Hispanic Leadership, NSHMBA, LCDA, all these. And in my angel investing career at Irish Angels, I was seeing a lot of these companies grow in wealth. I mentioned I've been successful with a couple of them, but there were very few Hispanic and Latinx startups that I was seeing. And there are very few Hispanic and Latinx investors as well. So I started getting together through different leaders and different contexts that I had around the country due to the networks that I had built. And I started talking about it and saying, look, there's a huge opportunity. And I think everybody in this call knows that, all the demographic shifts and all that stuff. And so so we just took action, right? A lot of people talk about things and talk about the problem. We took action. We put a group together about 3 years ago, piloted it. It had a bunch of founding members, co-founding members. And then we've been doing these quarterly pitch nights for the last 3 years. First year we had 50 members, second year 100 members. This year we're right now about 150 members or so, angel investors. We have about 20 companies in our portfolio that we've invested in. Our average check size is $200,000. Our largest check size is 1.6 million in a company called Canela Media, which is maybe on route to potentially being a unicorn here. So we'll see. And a lot of great sponsors and support that we have. Our mission is very simple. It's to find, fund, and grow the most promising Hispanic and Latinx ventures based in the United States. And we want to continue, to raise more money so we can deploy more money and help these businesses grow, help our communities grow. And at the same time, look, we're also in it to make some money as well, right? But to Eli's point, this is a risk. It's a high risk, high reward asset class. And that's what we're doing. That's our mission, and a lot of great momentum behind it.
Absolutely. I want to highlight you use the word action, and at LBAN, obviously the Latino Business Action Network, we're very proud of that word and the impact that it can have when we as Latinos come together and not just talk about a problem, but actually take the steps to solve it. I also want to mention the importance with the Angeles Group of bringing Latinos together to invest in Latinos. That's something that to us is really important. And I want to congratulate you because I think that's extremely important. I know, Eli, you've done a lot of great work on that end as well. So I want to go to Francisco and talk a little bit from the startup side. And I know that there's in the crowd a few startups there. So you've received investments from both VCs and angel groups, including Angeles. Why did you seek out Angeles, and what did you find important about getting angel investors?
The first thing to consider, and this is, we all know this, but when you're raising money, you want to get added value. You don't want just the money, you want smart money. And when you raise from a VC, which is great, you will have a team of people behind you and helping you out. And this is what I really loved about raising from syndicates. When you raise from a syndicate, you have one entry in your cap table, but you have 50, 100 individuals with networks, with experience that you can tap into. So that's been really helpful for us in many ways. For example, I can think of so many examples. I think we have around 200 angel investors through these syndicates, but we managed to close a B2B deal through one of our angel investors that reach out and say, hey, I invested through the syndicate. I want to connect you with this company that it's looking to buy a similar program to Storybook for their employee benefits program. So we went and we closed that deal, and it came from one connection. Maybe he invested $1,000 in the company, but the value that he added, it's so much higher than that. I recently visited a client in Salt Lake City, and there was one of our investors through Angeles. Now we are good friends with him. He was there waiting for me. He took me to have breakfast with a bunch of other investors that I met thanks to him. So you start tapping into so many people's networks, and you have a lot of people behind you, cheering you up, spreading your news on social media. Every time you post something, they are there to spread the news. So I think that's one of the things that excite me the most about syndicates. And I've seen a few questions around here about how to reach them. And well, the CEO of Angeles Investors is right here. So he will be able to let you know the official channels. In my case, I had the pleasure of meeting David at an in-person event. We pitched there. David was there, and he told me about Angeles, and we didn't doubt it for a second. We applied through their process, and we made it to the quarter meeting, the quarterly meeting that they have. We pitched in front of them, and apparently there was a great fit, and we had a bunch of people interested, and now we are planning for the next steps. So yeah, happy to tell you more about how I got introduced to Jason and all our experiences with angel investors, but I don't want to throw it all there right now.
Yeah, no, I think, Francisco, you mentioned a couple of really great things, and one of the ones I want to highlight is just the importance of smart money, people that can come in, and even if it's a low amount check, but they're able to provide networks, they're able to provide connections, feedback, things that I think are really important to founders. So I want to mention that. The other thing I want to clarify just real quickly, because you mentioned having too many people on a cap table, just to bring some background into that. When you have a startup and you are adding investors, sadly, or not sadly, but just one of the ways that venture and equity investments work is that if there are too many people on your cap table, it becomes a little bit messy. And so the bigger the company gets, the less investors that people want on your cap table. And that's why Angeles Network and other angel groups, when they're able to bring a lot of investors together, but only have one name on that cap table, it is really important for startup founders, as that cap table doesn't become messy and it becomes a little bit more attractive to different funds. David, I want to go back to you and just talk about when building Angeles and you're bringing in more and more investors every year, I would say every quarter. What is it that you look for those that are in the audience and they're saying, hey, I'm interested, but am I the right profile? What is it that you look for when somebody is trying to become an angel investor and become a part of Angeles?
Yeah, we have two classes of members. The first is the investor class. Then we have a new class that we rolled out called associate members. So we're going to talk about the investor class, and Eli did a really great job of defining what it means to be an accredited investor, right? The income, the assets without your home, and all that stuff. So the first thing is that they need to be accredited, right? The second is they have to really kind of realize what they're getting into, that this is a high risk, high reward asset class, where a lot of wealth has been created, but it's also risky. The other thing that we're looking for is you have to be curious, right? These are new companies. They're trying to disrupt the world. You look at, what Francisco's doing with Storybook and really trying to go after a market and aggressively grow and scale. So you have to be curious and want to learn. You have to want to improve your innovation muscles as well. Because if you look at, for example, even like, what Lasso pitched to us as well, and what Francisco's doing, they're innovative business models and what they're going to have. So you have to be open to innovation. The other thing that, we look for, but we just put that also out for value, is a couple of our members have got on board seats. So they've also received board seats from this. So Rodrigo Garcia, but when we did the second large investment in Canela, received a board seat, and now who knows, they could IPO, they could get bought, and they could be potentially a board member on a public company through Angeles. And then we're about ready to announce one of our board members who's going to serve on another portfolio company. So it's also, for potentially those who are looking to serve on boards, this is another avenue for that. So those are the things that we look for, in potential members. And really, you got to, I guess all of that, the most important thing is you got to believe in our mission, right? Finding, funding, and helping these grow.
Love it. Absolutely great. And, David, if you want to drop some links in the chat where people can get more information or sign up, and we'll definitely, before we leave, make sure to mention some of those things. Eli, I want to go to you because I know you've been around this game since 2005. You've seen a lot of people pitch their businesses, some really good, some not so good. So I want to ask, in terms of the startups, what is due diligence? What can startups do to best prepare to pitch to an angel group? And also, as an investor, what are the things that you look for? So if you can give us some insights on both sides. For startups, what can you do best prepare? And then as an investor, what is it that you're looking for?
Yeah, so the easiest way to think about it is I'm approaching you for money, right? So put the hat on the other side. I'm approaching you for money. Do you just give your money out willingly? No, you're going to want to dive into, certain information that you need to know as to whether the company has reduced that risk. So you as a founder have to walk through the different elements of where you can reduce risk. So for you, do you have a full-time management team? Do you have technology that can be protected? Have you truly identified the market? What does the competition look like? Do you have your corporate housekeeping in order? There's all these different elements that need to be covered. And the more prepared you are as a startup, and we like to say that the product is the front of the store, the due diligence is the back of the store, right? So when we dive into your company, we want to see that you have those things in order, right? So that we make sure that we're reducing as much risk as we possibly can. We don't want to find out later that you're being sued by a former partner, right? Because that increases risk for us. So those are things that you need to be thinking about. Number two is you also want to do some homework on the investor. I get pitched all the time, and the worst thing, my biggest pet peeve, is getting a cold pitch on LinkedIn, right? And it usually comes like this. Hey, Eli, I have XYZ. I would love to collaborate with you. I would love to get your ideas. That means they want me to get online to pitch. The ones that interest me are, Eli, I've done research on your portfolio. I've done research on what you're involved with. I know that you like to fund, underrepresented founders. I know that you're in the tech space. I know that I would love to I have a solution that looks like this, and I'm raising this amount. Can I send you a pitch deck, right? I don't want to see it right off the bat. So you're doing your homework on your side as well, so that you make sure that you're aligned, because again, you're also actively looking for those partners. And at the end of the day, angels are like vampires, right? You got to go hunt them out, because they don't walk around with a name tag. They don't walk around. You'll find them some on LinkedIn, but many of them you won't, right? And you can dive into the ACA directory. Where's the ACA directory? In the chat, right? So you can do research on 200 plus angel networks and start to narrow down where you think you're going to be a good fit for some of these groups. And then when you present, you're polished, right? You can have your 30-second pitch, your 5-minute pitch, and then your 20-minute pitch. Right? So you have to be really, really ready to present, because at the end of the day, David and I can attest to this. We see so many companies. I mean, on a weekly basis, I probably see 30, 40, 50, across all the groups that I'm a member of, across LinkedIn, across platforms that I get sent. I mean, I see literally dozens and dozens of deals per week. What's going to make yours stand out? You have to figure out where you reduce that risk and stand out amongst all these other deals that you see or that we see.
I think that's great advice. And it's also a great transition to the question that I wanted to ask Francisco. I know we have about 20 minutes left, so I'm going to move through some of the questions fairly quickly. But for all of you that are listening, please make sure to include your questions so that at the end we can ask your questions. I saw a couple come in. We'll make sure that we'll get to those towards the end of the call. We also want to give time to make sure that people can share their contact information and where people can start connecting. Francisco, I want to talk to you because we hear from you like kind of how to reach out to angel investors. What is it something that you look for when it comes to an investor and especially an angel investor as a startup founder? What is it that you are keen on finding and looking at?
Yeah, and that's a great question, because just like an investor is scanning through dozens of emails and decks, you have to be able to be as good as fast to scan through LinkedIn profiles, through AngelList groups, through all these sources where you will find lists of hundreds and hundreds of VCs, angel investors, angel groups. And yes, it's important to understand if there's a fit straight away. There are some things that will tell you if there's a good fit or not. Most of them will tell you their check size and their how early they invest. If you're in that stage and it's the check size, and if they are agnostic or if they invest in your specific industry, that's the easy one. That's easy to start. But another thing that you don't want to do is to spend your time pitching investors who are not willing to put the money right now, because they might be raising as well. So as a founder, you want to make the most of your time, and you want to be engaging with investors who are ready to deploy if you are raising money now. Now, as a CEO, and if you choose this path of being venture backed, you are always raising. That's a good saying that I like to carry in my mind. Even if you're not raising right now, you're building relationships. But if you're raising now, you don't want to spend your time with someone who is raising money and won't be able to deploy. So those are some skills that you will need to deploy over time. And what are the questions to ask? If you manage to get the first meeting is the one not only for the investor to decide if you are a right fit for their portfolio, it's the other way around as well. Is this a company? Is this a fund? Is this an angel investor? Someone I want to engage with? Are they ready to deploy, or they want to keep me for months and months and months to see how I progress? So it goes both ways, right? Now, again, raising funds is a numbers game. Even if your company is fantastic and you have the best metrics, you will run into these things. Some investors are not ready to deploy, or you're not the perfect fit, or they only can do 2 investments in your space per semester, and sadly they already did 2 of them. So it's a numbers game. You have to pitch 100 people to get 10 checks. That's how it usually works. Again, coming to the angel syndicates, that's another way that I see makes your time more efficient, because you're giving one pitch, one presentation, there's one due diligence, and that will get to the eyes of probably hundreds of people. So yeah, I think that's an important point to make.
Yeah, no, absolutely. And I love kind of always be raising, or at least one of the things that we talk about at LBAN is at least always be creating those connection points and those networks, because it's hard to raise and just go ask money from somebody. So the more connections you have, the more network that you build, the easier it is. We have about 5 minutes left, and then I want to get to some of the questions that I see. But again, for those of you listening in that are interested, please make sure to ask your questions on the chat. We'll have a few minutes to answer those towards the end of this call. David, I want to go to you and Eli as well towards the end of that. But I want to ask, we talk about the risk that there is in investing in startups, right? How does Angeles choose the companies they choose to pitch and to present to everybody? And what happens to kind of maybe showcase some of that risk, but also talk about why, even with the risk, it's a good investment to make. So maybe you can talk about what that looks like. And I know on the chat, you kind of got ahead of that question and put it out there, but would love to hear from you about it.
Yeah, so we look at about 100 deals a quarter. Those come from our members, they come from our website, they come from different venture capital firms that we've partnered with. It come how I got connected with Francisco at an event in Miami. So it come from different places. So we look at 100. We have an initial team that kind of looks and kind of sees. We've developed a little bit of pattern recognition of what our investors like, and we put criteria on our website. So we kind of first see where that is, and then we begin a filtering process. Then we have a selection committee that's made up of like 8 or 9 analyst members, and we look at deals every quarter, and then we get it down to 3 or 4 that pitch to us every quarter. And then every once in a while we'll do something what we call off cycle, not on there, depending on how moving they're fast and how much interest there is. But that's how we select and get those. And then we need to get, once they pitch, we have to have more than 60,000 in interest, and then we put together one entity and then we invest. And like I said, our average check size is 200,000.
That's great. Eli, anything else on this, and just kind of how angel groups reduce some of the risk? And you're a member of Angeles, so just give us some information on that.
Yeah, so what you want to look for, let's go through some of the stuff that's in the chat, is you want to see if the group has a thesis, right? And this is what I love about Angeles: find, fund, and grow Latinx companies. I mean, that's pretty straightforward. Then it dives into it from there. Ours with investors of color, I'll share with you the way that we've designed it. We invest in seed to Series C companies that are in the following spaces: fintech, edtech, health tech, enterprise software, sports, and media. So I've given you the criteria, I've given you the stage, with business models that have a positive impact in communities of color. Okay, that doesn't mean you have to be a founder of color. That means your business model has to be in that space. So I've given you enough categories there for you to determine, okay, am I the right stage? Am I the right tech sector? And do I have the right business model, right? So you want to look for organizations that have a very clearly designed thesis, so that you can eliminate some of the folks that aren't really there. And then you want to walk through what their process looks like. Most angel groups should have some semblance of what their process is, what their timeline is, apply here, right? So that you walk in better prepared, versus sending something to some black hole and then you never hear about it. And then the last thing is, to the best of your ability, you want to get somebody that's on the inside to help champion your deal into it, right? Ideally, somebody that's willing to write a check into it as well, so they can present it to the group, because there's a little bit of that network effect. So start with your local angel group. So again, it's all about reducing that risk as much as you possibly can, from a personal side and from a business side as well.
Perfect. So I want to get to some of the questions that our attendees have asked. But again, if you're watching us, you're hearing us, make sure to ask questions. We'll have a few minutes for that. When we're done with audience questions, I do want to give everybody some time to plug in their own contact information and just any last minute comments. But Diego, not sure if you want to come in and ask the questions. I saw about 3 questions. Maybe we can start. Sergio Ripamonti asked, where can one present his or her project for evaluation and potential funding? I know, David, you posted the link, but if anybody wants to maybe mention anything else on that.
Yeah, you can submit on the website. Look at our criteria, right? Because we kind of lay out even more, beyond fund, find and fund Hispanic and Latinx ventures. We talk a little bit about revenue traction. We like a lead investor, and there's a couple different things, right? So we want to be respectful of your time as well. But so check that. You can submit on the website. I gave my LinkedIn information. If you want, you can send it to me directly as well.
Perfect. Pam Isam asked, what is the minimum capital raised? 50,000, 100,000, 500,000. It seems many ventures or angels are seeking the unicorns. What if a company may only grow to $1 million or not so much to $1 billion? Is it better to seek out a bank for these lower capital raise needs? And I have some feedback here, but not sure if either of you want to tackle this.
Well, I'll share just thoughts, right? It's a low risk, high reward. So when you're looking at deals, you prioritize around those that are operating in big markets and that can scale, right? So if a company's coming in and they're not necessarily going to grow at that fast rate, you know, you're going to have 3 or 4 or 5 that are going to not make it in your portfolio, and you're shooting for those big, you know, the big winners. So unfortunately, those sometimes get deprioritized, right? It's because they're always looking for the ones that are operating in big markets and that can really return the fund, or return, you know, give our investors 10x their capital back. Would be my comment there.
Yeah,
I would.
Good.
I would add also that I'll double down on David's point. Fortunately, one of the things we're seeing in the asset class is investors being creative with how they're making these investments, right, with alternative type instruments. So revenue-based financing has really become pretty popular these days, where maybe the angel will grab a portion of your revenue, right, in exchange for kind of a guaranteed returns over time. That's one mechanism to help companies that are kind of on the upswing, and maybe works for angels that are kind of willing to put maybe a little bit less capital to work, but they work hand in hand to generate some returns, and then, you know, they can go their separate ways. So revenue-based financing could also be something. I'm also on the board of Founders First Capital, so that's an organization that's out there. So if you're thinking you may not grow to this massive company, but you're going to be steady, look at revenue-based financing as an alternative as well.
Yeah, absolutely. And the last thing I'll mention here for Pam and any other business that's maybe not necessarily destined to be a unicorn, but can scale to a size, maybe it's $1 million, maybe it's 5, 10, whatever that is. When it comes to angel groups, and specifically this type of equity investment, to David and Eli's point, they're looking for that high risk, high reward situation. Now, that doesn't mean that that's the only type of angel investor that's out there. When we use the term angel investor, it does typically lean towards that unicorn or high-tech investment. However, there are silent investors or business partners that will look for maybe a traditional brick and mortar company that isn't that high risk company and can only scale to a certain size. Those are out there. So we don't want to say that there aren't. Those just aren't necessarily in this group. This group is looking for high reward or high risk. If you're looking for an investor that will put in some money towards a company, you can make it an equity investment. You can say, hey, come in as an investor. However, you're not going to have these groups that come in with 50, 100 people, because typically those groups will look for that high reward, high risk. But there does exist investors that are willing to put in for companies that are going to be smaller and become sort of these silent investors or business partners. But if you have more questions about that, please reach out to me separately. I want to ask from Javier Arguello. He says, how does one know in advance who is ready to deploy or actively investing in our space? I am hearing this is a numbers game and it's a sniper's game, target laser focus. So whoever wants to tackle that.
I can throw a comment there, and there's a couple of ways you can do it. You can look for information in Crunchbase, or you can find the latest deals reported from some of these funds. But for me, the easiest thing is that's something you ask. In the first meeting, the first thing you want to do is ask these questions before you waste, again, weeks or months following a conversation with a fund that it's not ready to deploy. So it's a straightforward question. Tell me more about your current fund, how large it is, how much have you raised, are you already deploying from that fund? If they are about to run out of money from that fund, are you already raising another one? Are you investing from that another fund? Those are kind of questions that they will most likely tell you straight away, and they will be clear in either they are building a pipeline, they want to hear from you for future investments, or if they are ready to invest now. So I think asking that straight away gives you the advantage of making the most of your time, and also you come across as someone who is prepared, someone who is not for the first time doing this and going along with any conversation. So you want to be selective about your conversations, and that's a great way to do it.
Great. I want to address the question that Luciano put in and real quickly, and then one last question, and we'll finish up with last comments from each of our panelists. So Luciano asked, might have missed it, but can you share a bit about the specific traction you look for in pre-seed versus seed, and are you willing to syndicate with other angel groups, ventures, etc.?
So the latter part, yes, we love it because I think to Francisco's earlier point, right, you have partners in the deal and a lot of people that can help this company. So we love to syndicate. Typically on the pre-seed, there's not I personally, and Angeles also, I think in general, likes revenue traction. And it's month over month revenue traction to the extent it can be recurring revenue traction. Pre-seed, you're not necessarily getting, and everybody's got different definitions, but pre-seed, you're maybe looking for other traction, pilots, products, wait list, things like that. But it's revenue traction and it's month over month or quarter over quarter. You really want to see that. And I'm telling you, the best investments, you see that and it just doesn't stop. It continues to go and go. So to the startup founders or the startup owners that are out there, that traction and that month over month growth is vital.
Great. Yeah, absolutely. And I think sometimes when it comes to pre-seed, it's tough to know what that traction looks like. So it's always good to ask, and sometimes maybe going after specific angels instead of a group when you're very early on. I have one last question that I want to get to, and then we'll go into last comments. So Yenny said, if you apply for accredited investor membership through Angeles Investors, is there a minimal investment dollar amount expectation?
So we ask our members to invest $20,000 a year. It's I wouldn't say it's super like a super hard black and white and you're out kind of thing, but that's what we ask. The minimum for any deal is $5,000. So we've had members that have invested $5,000 in a deal. We have some members that have invested individually $120,000 in certain deals, right? So that's the expectations.
Great. And I just want to answer this last question really quickly from Crystal, which is, I'm looking to create an EdTech charter school for K through 12, and the process will take at least a year to complete. How soon should I start seeking investors? I'll address this really quickly because this is something we talk about LBAN. No matter what investor you look for, whether it's a silent partner, an angel group, a VC, a bank, whatever it is, the sooner that you can start creating relationships with capital providers, the better you will be. I always relate it to if you have a son or daughter and they come to you and they say, Dad, Mom, can I have $20 for gas? You're probably going to be like, no, right? But if they're kind of fixing up the house or doing things and then they come to you, you're more likely, right? And with VCs and with different capital providers, it's similar. If you're going to do a cold email where you're like, can I have $100,000 for my business? The answer will be a very quick no. But if you have a relationship that you've built through months and years, right? First of all, the ask won't even be an ask. Most likely, your investor will come to you and say, hey, I see the work you've been putting in. I'm interested, right? So you want to build the relationship the soonest you can, and don't come at it from the selling standpoint. Come at it from the, I want to learn more. I want to create a relationship. The more natural it is, the better it is. So we're almost at time. I'm extremely grateful and thankful to the panelists that we have here. I want to give them a quick minute. We'll start with Eli, David, and then Francisco to tell us a little bit more about where people can reach them. Any last comments, you can also include them in the chat. Eli, we'll start with you.
Awesome. So, but definitely connect with me on LinkedIn. You'll find it up in the chat. I'll put it in the final comments as well. But we need more. We need more people in the game. We need more Latinos deploying capital. There's capital and then there's capital structures. We need to move to the level where we are mobilizing capital at exorbitant amounts to actually make a true economic shift in startups, in businesses, generational wealth, filling the wealth gap. I mean, there's so many different areas and we have the power to do it. The more that we learn, the more that we engage, the more that we can deploy capital, the more we're going to make a change. So connect with us, work with us, engage with us, reach out to us. We're here.
Absolutely. David?
Yeah, no, so, a lot of this, the traditional non-Hispanic and Latinx founders have had friends and family around. So we're operating as friends and families. But to Eli's point, we need to grow that immensely, right? We want to fund 3 to 4 companies a week, right? And so we need more capacity, we need more investors. But what I see happening, and there's only 2% of our founders are getting funding, and we're 20-30% of the population. There's a social aspect to it, but the other aspect is that I think we have an unfair advantage because we know how hard we work, we know how connected we are, we know the demographics, and I think we can make a lot of money. And when those companies, we invest in them, they make the money, we can redeploy it and get an immense flywheel going for our communities and our country.
Absolutely. Francisco?
I'm inspired by your words, David. And yeah, happy to connect with everyone. If you're a parent, and I'm dropping my details here, try Storybook tonight. Your feedback, your support is always important. And happy to connect and follow on if anyone is raising money and wants to ask for what worked, what didn't work in the past. Of course, if you're a startup and you're aiming to be venture backed, feel free to reach out. Happy to provide my 2 cents. And yeah, and everyone, thanks for being here. Thanks, LBAN, for organizing this. Eli, David, a pleasure sharing this with you.
Absolutely. So thank you all. Thank you, Eli, David, Francisco. I know that some of you that couldn't be here in person are watching the recording. For all of you, again, we highly recommend looking at investing in Latino and Latina-owned companies. We are the future of this country. We are a global powerhouse when it comes to economic change. And there's so many resources out there, including Angeles and the ACA and so many different options for you. So we highly recommend you look into that, invest in Latinos and Latinas. We are going to be this powerhouse. Hopefully we'll see all of you February 16th at Stanford for the unveiling of our research report. Thank you all and have a good day. Thank you.
Thanks so much.